Hey, good morning. This is Mayor Valensky with Driving Markets. Driving while talking about markets, sometimes stationary, but generally driving we're talking about markets. Okay, anything said in this piece is for media publication only. It's not advice, not investment advice. Any profits you make is for you, any losses are yours, etc. Let's move on. Okay, so the big news, even before going into what the markets did yesterday, the big news is the cryptocurrency complete and utter crash yesterday. Wow. Okay, so let's just delve a little bit deeper into that. I've been saying for a while, all along, sell Bitcoin, sell the cryptocurrencies, sell Bitcoin, sell the cryptocurrencies. And yet they haven't really dropped. They've sort of floated around a little bit. And this last few days, last week, they went up, Bitcoin went up to 21,500. And then yesterday it completely and utterly collapsed. So let's just explain in detail what has actually happened within the crypto market. The cryptocurrency market is dependent on liquidity. Now remember, this year, from January all the way through to now, liquidity has become much, much tighter. What is liquidity? Liquidity is the freedom of the movement of cash. So with rising interest rates, rising inflation, and the central banks pulling in their quantitative easing and their stimulus packages, they've taken money out of the economy, taking money out of the markets. And by taking money out of the markets, there's less fluidity, less liquidity to move the machine. Now that's been okay up until now. Markets have been pretty volatile and equity markets dropped. Again, we'll go into that in a few minutes because I just want to focus very much on the cryptocurrency market. Now, Binance, if you know it or if you don't know, it's one of the biggest platforms for buying and selling cryptocurrencies. And they've gone and bought out FTX. Now, FTX is owned by Sam Bankman, which is, he's the CEO. And they've gone and now been bought out by, or merged, let's call it a better word, with Binance because of major liquidity problems. Now, they have a token which is called FTT, and Binance sold all its FTT tokens in order to finance the deal to pull in FTX. That caused a run or a drop on FTT and caused extreme volatility. As a result of that, that liquidity, which was money being pumped in to FTX in order to save it essentially, has caused huge concern amongst crypto traders and Bitcoin traders. And what they've done is the price dropped dramatically. It's gone down again. It went all the way down to 18,600, now 18,400, and it's going to go down further. I've been saying all along that the cryptocurrencies, especially Bitcoin, which is the leader, and Ethereum, are going to go down. They're going to be hit significantly, and that is going to continue going forward. So anyone who's a Bitcoin trader and anyone who is a cryptocurrency trader, you can expect major falls going forward. This is not a one-off event. This is a continuation of what's happened throughout the year with other platforms going bust and other having major liquidity problems. MicroStrategy, which has a huge investment in Bitcoin, is also under pressure because they're going to get a margin call very soon. If they haven't already had one, they're going to have to pump a lot more money into their position in order to hold on to it. So crypto traders, Bitcoin traders are going to see a lot more volatility, and the price is going to trend downwards. Okay, as I said all along, look at all of my driving markets YouTube videos and my Instagrams and Twitters. Bitcoin is going to be 15,000 minimum by year end. It could be even more than that, but it's going to be 15,000 at least by year end. It's going to fall off the cliff. And the main reason behind that, as I stated all along, is liquidity, high interest rates, and it's a high risk asset. So those traders who are looking to think that Bitcoin and cryptos are going to go back to all-time highs where they were at the beginning of the year are wrong. It's not going to happen. And the reason why it's not going to happen, as I emphasize again and again, that it's a high risk, it's liquidity, and people and investors are going to sell that particular asset. Okay, so expect a lot more action within the cryptocurrency sector. I've dedicated a lot of minutes to this, more than nearly 5 minutes dedicated just to the cryptocurrency, because it's a major asset amongst the trading. It's attracted a lot of attention over the last years, and all those people who don't normally trade or don't normally invest have got some involvement with cryptocurrencies. Why? Because they actually say, oh, I want to be involved at some stage. I want some involvement in cryptocurrency. So expect the trend to continue down. The rest of the equity markets were up yesterday on anticipation of good, solid midterm results. Now, what does that mean? Does that mean pro-Biden or pro-Trump or pro-Republicans? I'm not up to speed with where we're at this particular moment on the results, but some of the states are neck and neck. The Republicans could well take the Senate and the House. We just don't know. But remember, a solid result is better than a quaky result. Okay, something that's absolute direction is good for investors, and traders like it. So that has an impact on equity markets, where they probably believe that the Republicans are going to take the House and maybe the Senate, and that will give them more or less control of the US, where the White House will be left with Joe Biden, and he'll have to make executive decisions to get things done if the Senate and the House is taken over by Republicans. So that sent up equity markets yesterday. The Dow went above 33,000. I'm of the opinion, again, I want to stress this very, very clearly, that we are going to see a major hit on equity markets. There's not enough there to support them. There's not enough corporate earnings, and there's not enough liquidity to support equity markets at these levels, and they look far too high. They look like they need to come off significantly. So it's probably a good time at these levels to sell, because I don't think they're going to have enough steam behind them in order to push them up or sustain them at these levels that you've seen. The shares that are going to look very vulnerable is obviously the Nasdaq and the high techs. A big seller, big negative on Facebook Meta. I think that's going nowhere. And the other ones obviously are going to be Apple, Amazon, the Netflix, the Googles, the Microsofts. Those are looking definitely to sell. Carvana, which is an interesting one, that came off, that lost 24% just on Monday alone, after they came out with disastrous results. So anything high tech at the smaller level, not the giant high techs, the small levels that fail on their corporate earnings, they are going to be absolutely hammered. The dollar was weak again yesterday against all the majors, the euro, the yen, Swiss franc and the pound, and that's because equity markets went up. As equity markets go up, then the dollar sold off, because the dollar is seen as a safe haven and a where to put your money in times of nervousness. So it was sold off, where investors piled into equities and high risk assets, apart from cryptos, which we mentioned earlier on. Oil came off slightly. Again, oil's volatile. One day it's up, one day it's down, based on there's not enough supply, or China's opening up, or now there might be recession, so it goes down. But it's hovering around the 85 to 95 level. It's purely a trading stock, trading asset, and therefore there is a lot of movement within oil itself. Gold was interesting. You see gold also is floating now past the 1700 level, and the next level will be 1750. If it breaks through there, then it's going all the way up to 1800, 1850. So 1750 is the next resistance level. Those who are long of gold, probably best to stay long of gold at this particular moment. That covers more or less assets and equity markets. The elections will be an interesting one. I personally think that the Democrats and Joe Biden need to go. They're just not managing the country at all. Probably the worst president in history. There is this competition there as to who's the worst president, him or Jimmy Carter. But those who went around the time of Jimmy Carter, he was pretty disastrous as well for the US. So Joe Biden probably needs to go. And if he runs in the 2024 or walks in the 2024 elections, then I think they're going to fail miserably. That's overall on the geopolitical regarding Russia and Ukraine. I don't think that war is going to end. I think it's going to go on for many, 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 many months. Putin's not going to give up just like that, and that is going to send the cost of soft grains and commodities higher. Okay, so expect inflation to rise. Remember, you've got CPI, Consumer Price Index, out in the States tomorrow. That's expected to come in 8.1. just be absolutely clear. If it's higher than that, the markets are going to dump. And if it's lower than that, then the markets are going to fly because they think that inflation's under control. I personally think it's going to come in at 8.3, 8.4. It's going to be higher than expected. That's my view. But who am I to argue against all Wall Street analysts? Yeah, exactly. Okay, that's it for now. This is Mayor Valensky with Driving Markets. Have a good day. Speak to you soon. Subscribe. You can comment on YouTube, look at Instagram, and whatever else you need. Have a good day.